The 70% increase in our profit after tax for 2013 was particularly pleasing because it was driven by a very good performance across all of our business units. So in terms of year-on-year percentage increase, probably the largest increase was in fact in our securities business, but it's a relatively small contributor towards total profit after tax for the group. The largest single contribution, in fact, came from our personal and business banking business and our South Sudan business. Those were the two primary drivers of the increase. But I think important to point out that, in fact, across the board, we had a good performance in 2013.
You did mention South Sudan was one of the key drivers of growth for the business, but also we saw some political turmoil coming in December. How did that hurt the business? And also going forward, is it likely to impact on other plans that you have for South Sudan?
Fortunately for us, we only represented in Juba, which was largely peaceful throughout the turmoil that we've seen beginning on the 15th of December and which continues today. So clearly we've been affected in the sense that our customers have been impacted. So how are we impacted going forward? We think obviously our plans to expand our branch network to centers outside of Juba is impacted by the fact, from a timeline point of view, we don't think we'll be able to do it as early as we had otherwise planned to do. But we remain very optimistic that the current negotiations will result in a favorable outcome.
Talking of your distribution footprint, as you did mention in South Sudan, I'm more interested now to find out what are the other expansion plans that you have specifically for Kenya.
The immediate priority for us is in fact to expand our branch network in the coast region, Mombasa in particular, as well as in Malindi in 2014. And I think the reality when you're building a retail business is that new investment in branches now at the margin has much less impact on our financial performance than it did 3 years and 4 years ago, simply because in percentage terms it's a smaller number.
During the presentation, the Chief Financial Officer did mention that current account lending does not reflect where the bank wants it to be. Maybe you can give us an indication exactly where do you want it to be?
In 2013, loans and advances growth to the private sector was in fact dominated by the growth in our personal and business banking business. Corporate appetite for credit was in fact subdued. And we think that that's just part of the investment cycle in the sense that we think that some of our corporate customers delayed their investment decisions awaiting the outcome of the elections. So we think that in 2014 we'll see a much better mix of contribution towards growth in our lending to the private sector. We think obviously as well that government issuance of paper in 2014 in the domestic market should be lower as a consequence of the Eurobond issue which is being planned by government. So lending to the private sector generally in 2014 will be much more important to us than it was in 2013 and is a key focus for our business in 2014, both in CIB and in PBB.
How is the bank positioning itself to take up on the new found discoveries, not just in Kenya? We're seeing oil discoveries in Kenya, in Uganda, new gas discoveries also in Tanzania. How are you positioning yourself as a bank?
I think the reality is that the spend that is happening at the moment is in the area of infrastructure services and exploration. So it'll be a while before we actually see any flow activity as a result of oil flowing. So, but it's important for us to be involved at the outset, in the initial stages. So we're well positioned and we are focused on making sure that we capture an appropriate share of that business.
By saying that you're well positioned, what exactly do you mean?
Clearly, as part of the Standard Bank Group, we benefit from the fact that we do have expertise in oil and gas and in infrastructure generally. I mean, you will recall and understand that we are active in Nigeria, we are active in Angola, and those are economies which are significantly driven by the oil and energy sectors. And similarly, most of South Sudan's GDP is actually driven by the oil sector. So it's an industry that we actually understand, we have relationships, we have competency and ability.
The government is set to issue its debut Eurobond, about $2 billion in a couple of months, depending on the timelines that the government has. And of course, this will have an impact on interest rates. What is your outlook, not just for your bank, but also for the country?
I think the outlook for Kenya is extremely positive. The fact that that government is diversifying its sources of finance, we think is extremely important, given the scale of the investments that need to be made in infrastructure, which have a relatively long payback period in an economic sense. So building a new port, building new roads, building a new transport corridor, those are absolutely the right things to do. But what you don't want to do in the process is crowd out the private sector. So the fact that government is in fact diversifying its borrowing to include international capital markets is an enormous plus for how government finances the infrastructure and other investments necessary to take us to the envisaged double-digit growth. I think more importantly, government will act as a pathfinder for other Kenyan corporates to borrow in the international capital markets. So it's a very important step. And we think enormously promising and exciting. It just means that there's access to more resources to do more, and that clearly is what we're all seeking to do.